Do 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 do. Hello, everybody. How's everybody doing out there? It is pouring rain here in South Florida. Pouring rain in South Florida. In fact, I'm looking at the bars here. Oh, there we go. We've got green bars now. We've got green bars now on our Trading View live stream. So I wanted to start off today with our lesson that we do every day, Monday through Friday, 9 a.m. Eastern. I want to start off by looking at gold, which is what we usually do because we start at 9 a.m. Gold opens up at 8:20, and around by 9 a.m. we've got the opening range breakout on gold taking place. And so I like to start the show off by looking at gold and just going over this strategy because it's a strategy that you can use every single day because it appears every single day, the opening range breakout, but it doesn't necessarily mean that it's the correct strategy to use for the conditions on the chart, right? So, what I mean by that is if you take a look at the situation right now in gold, yesterday we made our money in gold, right? We made our money in gold all the way back up to the high time frame supply zone. Okay, this is a daily supply zone that's drawn out here. And you can see on our 1 hour chart, we made money all the way up to that supply zone. And you can see here that the candles are now turning ice blue. When the candles turn blue, if you're using the TrendCloud system that we put together, okay, if you're using the TrendCloud system, you'll see the candles will turn blue sometimes. And that means that the trend has become extended. And if you see here, we can count, right? Here's 4, 5, 6, 7, right? In fact, yeah, all of this pullback took place. Here's 4, everything went sideways, and it didn't become 5 until all the way up here. So 5 waves in an average trend, pullback 6, and then extended into that 7th wave. Candles turn ice blue to show you that. And it happened to become extended up here in the supply zone, high time frame supply zone. So this is really the only time that you can take a counter trend move. When you're extended in a high time frame supply zone, then you can take a chance on capturing the movement from here down to the 50 and possibly even trend reversal. But as of right now, we've made that move. It kind of did this in the overnight session. So we've made that move already, and we need to wait now, right? So why do we need to wait? Well, we have an upward trend on the middle time frame and an upward trend on the high time frame. That's pretty powerful. That's powerful information. You've got 2 elements involved there. You've got trend, okay, and you've got multiple time frames. So we've got trend going up on multiple time frames. That's a very powerful element. So if we short this up here, if price pulls up to here, we're fighting against the trend across multiple time frames here. If we go long, like it's right now, gold is breaking out to the downside in an upward trend across multiple time frames. Okay, so this would be considered some type of bear trap. And as we're breaking out to the downside, there might be a lot of people who just want to go short here, continue to go short. And there might be people here that want to go long. So who's right? Well, it's never a matter of right and wrong. It's a matter of what happens, really, right? So this is a situation where if we go short up here, we're fighting against a trend. If we go long down here in some sort of demand, right? Like right here, if we go long here, we're fighting against momentum. Because look, momentum is down on the middle time frame. Momentum is down on the high time frame. And we're also cycling down. Okay, we're in a corrective move on the high time frame, as well as the middle time frame. It's just starting to turn back up. It's trying to decide whether or not this area here is going to be a turnaround point. It's trying to decide that right now. So what do? Well, remember that trading is for short-term growth. Trading is for short-term growth where you can make a lot of money really fast. That's trading. So you really want to only take trades when you have perfect conditions, right? You only want to take trades in perfect conditions. You're not going to go, out on your boat in the middle of a storm, right? You're not going to do that. You want to go out on the boat when the ocean is calm, not when you've got a storm going on, right? I don't know if that was the best scenario, but I'm going with it. So I wanted to represent that here, that if we go short, we're fighting against trend. If we go long at some point, we're fighting against momentum. Now, you wouldn't know that unless you had this on your chart. And that's why TrendCloud is so valuable, because it's going to give you all of the elements that are a part of a trade across multiple time frames. And you only take the trade when those elements are all lined up together. Trend, momentum, right? Trend, momentum, cycles, multiple time frames, right? Support and resistance levels, and supply and demand levels. Okay, those are the 6 elements to every single trade, and that is what's represented by TrendCloud. That's why we built TrendCloud, so that traders and investors can see what's going on in the charts, and they don't have to rely on anybody else to give them information, right? It also makes you very dangerous in the market when you go to your financial advisor, and that person, maybe you're trying to find a good financial advisor, and they're saying that they really want to put you in this mutual fund, or they really want to put you in this particular stock, or whatever it is. Well, you can put TrendCloud on your chart, and you can say, okay, let's see, why are you putting me in this mutual fund? It doesn't seem to be outperforming the S&P in any way. And all you have to do is put TrendCloud on your chart and bring up the S&P and put whatever they are giving you next to the S&P, and just compare, right? You would just compare both of those on your chart. See, compare or add symbol right there. There's the S&P. Let's click onto here, and let's put let's see, Kazi. What's going on, Kazi? Good morning. Yes, yesterday was good. Yesterday was good. We made some money. I love the 3 money bag emoji there. Let's see. Let's go to one of our stocks here. I think Mara, M-A-R-A, right? Marathon Digital Holdings. Okay. So here's Marathon Digital Holdings right here. Let's open this up, and let's say we're going to compare. Now we're going to put the daily chart on here. Let's turn everything else off. recalculate the chart here. Wow. Okay, so you can see Marathon Digital Holdings here on the daily chart of the S&P. You think Marathon Digital Holdings is outperforming the S&P? It sure is, right? By a lot. So this is what you want to be able to do. You want to be able to choose stocks that pretty much, outperform. And let's put the full contract of the S&P up here, ES. Okay, there we go. And just recalculate your chart. So, yeah, Marathon Holdings, look at that, outperforming the S&P, right? So that is what you want to do if you want to compare, right? And then you just go like this, and you take that off. There you go. All right. Let's do that again. Let's try that again. Mara. Oh, it squishes it down, right? It's outperforming. In order to stay on the chart, it has to squish everything together. And it's outperforming so much that it's actually squishing the S&P chart. Okay, so there you go. Little demonstration on, very simple demonstration on how to add a symbol to your chart so that you can compare them side by side. Okay. So let's get back over to gold. Gold 10-year note in euro. Oh, that's why there's 3 money bags on there. I gotcha. three winners for Kazi. Excellent. Yeah, gold really made a nice move all the way back up to our supply zone. Let's get TrendCloud back on there. Exactly what we said it was going to do yesterday. There we go. So on gold today, it's breaking out to the downside. All right, breaking out to the downside, and momentum is down. Right, we're cycling down on that 15-minute chart here, so this is still going down. But we would be, to take the retest of the opening range, we would be fighting against the highest time frame upward trend as well as the middle time frame upward trend. So this is a clear example of mixed signals. Okay, and that's what we don't want. We don't want mixed signals. We want to be involved with trades that are going to give us short-term rapid growth. That is what trading is for. Short-term rapid growth, right? It's day trading. Short-term. You can make a lot of money really fast. Rapid growth, right? So the part of your portfolio for trading is separate from your investments, right? Maybe you want to invest in real estate. Maybe you don't have enough money to buy 3 or 4 houses for a real estate deal. So start looking at REITs. Start looking at ETFs that hold or house real estate. And you can put all of that on the chart, and you can start to plan out when you want to buy and accumulate these assets. Stocks are real easy because they're on our charts every day, right? But you can put anything on your charts. Okay, so if you apply TrendCloud to that, you're going to have more insight as to when to accumulate stocks and when to take advantage of short-term trades, short-term rapid growth situations like gold yesterday. Kazi made some short-term rapid growth yesterday on gold, the 10-year note, and euro. Beautiful job. Okay. And, how does he do that? Well, you've got to have a plan. You've got to have an objective plan. And I'm happy to say Kazi chose TrendCloud. I'm real happy to say that, that's when I know I'm doing the right thing. When people are using TrendCloud and it's working for them and they're making money, they're making their short-term rapid growth in their portfolio, great. I'm doing something right. And basically what I did, guys, was I put together a system that was objective, right? It's an objective way of looking at trading. And it's an objective way of looking at investing in your stock portfolio, right? We never short stocks. We never short stocks. We want to apply our process to accumulating stocks that we believe in, companies that we believe in, right? Apple, Amazon, Google. Okay. There's another guy in here, Graham, who likes to accumulate stocks, and we've got some stocks here on our list, right? These are all the stocks that we usually talk about, and these are stocks that we like to accumulate, right? So that is the approach that I take, and that's the approach that TrendCloud is a part of. So we will kind of wait for things to happen here, right? We will wait for either some kind of trend reversal on the middle time frame here to take advantage. Maybe tomorrow this travels down through here and we start breaking some downward structure. Then we have a reason to go short, at least off of that middle time frame, right? High time frame is still up. Okay, the high time frame isn't going to have a trend reversal until it gets all the way down here. So there is money to be made from here down, but what's probably going to happen, what's probably going to happen on the high time frame, let's open this up. What's going to happen on the high time frame here is this. Let me show you. We're in a corrective move in an uptrend on the high time frame of gold, right? And here you can see what we're dealing with. Supply, upward trend. We hit supply and we're bouncing off of it. Well, we're in a corrective move now. Where is that corrective move going to end? Right? It's going to end, it usually ends somewhere inside the trend cloud, right? Let me show you. Impulse up, correction into the trend cloud. Impulse up, correction into the trend cloud. Impulse up, correction into the very top of the trend cloud. It just kind of touches it, right? Impulse up. Where's this going to end? Well, most likely it's going to do the same thing, right, guys? It's not rocket science, So what we did was we adjusted TrendCloud, okay? And I'll show you what we're using. 15 exponential, 34 exponential, 50 simple, okay? Those are the parameters that we're using on our TrendCloud for gold because we see those numbers working the best. So use it, right? So where is this corrective move going to end? Well, it's going to end somewhere inside of the trend cloud here. Okay. Well, where? Well, you'll never know exactly where, but we can look for clues, right? Just like that bus going down the highway, you can look for clues. You can look for clues. Hey, Krishnan, what's up, buddy? Good to see you, buddy. Good to see you. You can look for clues, right? When you're watching a bus go down the highway, it can put the left blinker on, it could put the right blinker on, and you can be watching with binoculars. And I think the bus is going to go right. It has the right blinker on. And, as this bus is going up towards this high time frame supply zone, this is like a construction site, right? Like, it's heading towards construction, and there's people, with signs and waving stuff and trying to slow traffic down. That's like a supply zone, right? So we're saying, hey, it's probably going to slow down when it gets here. It might even have to turn around. And that was the scenario that we were expecting, right? Because we were watching this from a bird's eye view. And so that's what happened, right? Let's clear the chart here. So I like to go over that as much as possible because it's a simple scenario that happens all the time, right? And here we are. Right? There we are. That's what it looks like on the 4-hour chart. So you can readjust everything. I was drawing everything on the daily chart here. And what I was doing is I went from the top of the wick of the candle all the way down to this right here, all the way down to the body. Let me show you. See that? I went right to the body of this candle here. The body of the candle is where value is. Value is in the body of the candlestick. This is very rapid decision making, right? There were a lot of sellers here. A lot of big institutions were up here selling gold, okay? And now we've returned, we've hit that, and we're bouncing off of it. So on the high time frame, at least on the daily chart, this is turning into what? This is turning into a double top, right? First top, pulls back, hits the 50, impulse up, and as long as the wick of the next candle hits the top part of the body, you can call this a double top. It could do this even. The wick could do that. This would still be a double top. Why? Because it did not close above the first top, right? So this would be a double top because the wick hit the top of the body of the first top. Even if it breaks through, even if we get a break above, as long as we don't get a break above, close above, right? As long as we don't get a break above, close above, you're fine. So this is the situation right now. So we do have a double top, and we can treat it like a double top. What's going to happen on that daily chart? It would have to go all the way down and break through this, okay, right here, in order for us to say, okay, the upward trend has been terminated. Okay, we've got some structure right here as well too. So this would really be your first sign of break of structure, but it really needs to break through here. And TrendCloud puts a line on there for you as well. See that? So then we would look for that retracement back up to a 618. Let's see if we got that. Let's see here. Go from swing high to swing low. Look at that. Boy, I'm good. And right in here, after a while, guys, you'll be able to eyeball this stuff. Right here, 618 retracement level, that is your strategy for taking trend reversals, right? It's got to form a double top, break through structure, and once it breaks through structure, you put the Fibonacci retracement level on there from swing high to swing low on the second top, and you take the trade short right at that 618 retracement level. So right in here, the zone between 618 and 786, it's a great zone. It might do this, right? It might go hit the 886 and then reverse, right? Your stop loss in this scenario would have to go up here. And on the daily chart, I mean, that's pretty big, right, in this situation. So these types of trades work best when you've got a double top that is, more like this, right? When you've got a double top, right? First top, second top, then you get, okay, it would look like this. Okay, then you would get something like this. That would work better, right? Because now you're getting in here, you're getting in right here, and now your stop loss is here. So that just reduces the risk, right? It reduces your risk. Okay. Clear the chart again. High time frame curve, drop back down to the 4 hour. And that's where we're at on the 4 hour. So we're cycling down, right? We're cycling down right now. We are in a corrective move in this trend, represented right here by your cycle indicator. Cycling down. Momentum is down. That's a lot. That's two elements to the downside. But we're in an uptrend. So those are two forces colliding with each other, right? We want everything to be in alignment. Bouncing off of the 50 simple moving average here in this uptrend, starting to cycle back up, okay? Starting to cycle back up, but continuing to be in a downward momentum. So what is the situation here? Well, with this information, we can say, okay, we're in an uptrend. We've hit that high time frame supply zone, and we've broken back out to the upside here. So what if this happens, right? We break out to the upside. We'll have trend on our side, but momentum will be against us, right? Right now, we have momentum on our side, but trend is against us. So in this situation, because momentum is against us, if we go with the trend, break out to the upside, we pull back, it goes back up here and then does this because momentum is against us, right? We want everything to be with us. We want all the elements to be with us. So what do we want? A breakout like this, right? Pulls back. Maybe it breaks through structure right here. At this moment in time, if we see CCI break above positive 100, now we're ready to take the trade like this, right? Back into some kind of demand zone that forms. Okay? Or maybe it pulls back at this point when we break above positive 100 on that CCI. Now it does this, pulls back into the opening range for the move up. Okay? Very important to go through those scenarios. Very important to go through those scenarios every day so that you get it right. Okay? We'll just do like this. Okay, there we go. And this is all the way up here. My goodness. So, we're going to be in a situation. I mean, this is a huge supply zone here. This is just a huge supply zone. So there's going to be a lot of back and forth because people are going to be really scared to go long in this situation, right? But what do we do? We have to go with TrendCloud when everything is lined up, even though we're in supply, right? Because that's just one piece of information. So this is one piece of information, but when everything lines up, trend across multiple time frames, cycling up, momentum is up on multiple time frames. Yes, then you would go long even if you're in this supply area because this is just one piece of information. We have an entire system that's in place to tell us what to do when everything is lined up, right? So all of these elements together will be more powerful than just one piece of information, okay? All right, let's take a look here. Good lesson. Okay. It is almost 9:30. Let's take a look at crude oil. Recalculate here, drop down to the 5-minute. And crude oil, high time frame is down, right? High time frame is down. Middle time frame is now down. And momentum is down, right? So we've got all the elements together here to take advantage of some short-term growth here, right, on crude oil. What's going on here? There you go. Okay. Broke out to the downside on that 5-minute opening range. It pulled back. And it's continuing down. Okay. So interesting. What did we run into here? High time frame, we ran into that daily trend cloud. 4-hour chart. Let's take a look. What's going on with the 4-hour chart? 4-hour chart, we're just starting to break structure. We're below the trend cloud. We haven't gotten the crossover yet. Okay, but we did break through structure right here. Okay, so on the 4-hour chart, still a little early, but momentum is definitely with us to the downside. We do have a downward trend on the 1-hour chart. Okay, so we've got trend on the 1-hour, which is officially down. We've got a deep pullback on the 4-hour chart, and we're below that 50, right? So we're below the 50 simple. We just haven't gotten the crossover yet. So it's not 100%, but you can tell that we're still below the 50. Candles are turning yellow, which means we're in transition, right? Yellow candles on your trend cloud are transition candles from up to down, right? Green, yellow, transitioning to red, okay? So we've got all the elements, right? This here is not 100%, but that's just one little piece of the puzzle, right? And we're starting to cycle back up. So where is this thing going to cycle back up to? Well, it's probably going to cycle back up and retest the opening range for a nice move down, right? And that's what's going on here. Sell. stop loss, right? Right? That's we can short about 7 contracts. And, you know, is this number comfortable for you? You know, you may not be there. We always consider a $20,000 account, right? So if price comes back up into the opening range, we have enough on our charts to say, hey, we can take this move down. And you've got targets here, here, and here, right? Anywhere there's a support level in a downtrend, you've got you have a target. So the 5-minute TrendCloud could be a target right here. Structure can be a target like that. So when price comes back up into here, you can start scaling out of this move. And you can see down here, we have more targets, don't we? Here and here. Okay, what are those? Let's see. A little too far back. Let's go out. Previous month's low and the previous week's open. Okay, great targets. Great targets. Take a look at this. If we get a pullback as well, on the 15-minute chart, if we get a pullback, we're getting a pullback into the trend cloud, right? And that's what it does. Impulse down, correction into the trend cloud, impulse down. This one went a little bit past, but never crossed over. We never got the crossover. We never got the green candles. Impulse down. Correction into the cloud, impulse down. Correction into the cloud, impulse down. And this was a deep pullback hitting the 50 simple, and now we're impulsing down again. See, right here, impulsing down. Everything is on your chart. Everything is on your chart. Switch to the 5-minute, and we've got the opening range here with momentum on our side. Momentum is on our side right here. Right? So we have enough of an edge, right? We have a edge, right? I mean, that doesn't really make sense, really. Enough of an edge, right? An edge is really just anything that's going to give you an advantage is an edge. Anything that gives you an advantage is just an edge, okay? So pulling back into here, we're going to say we have enough of an edge because we're in this downtrend. We're starting to turn green here now, okay? So we don't like that. I don't like that. I like to see red across the board, right? So basically downtrend, broke through structure on that 4-hour chart. Momentum is down. Momentum is down. Okay. So do we want to take a chance on this? Maybe we take a smaller chance on this, right? Because we have some elements against us. Okay. Take $100 risk. Take $100 risk. Not quite, right? Not quite a downtrend. Not quite a downtrend, but candles are red and we broke through structure over here. Okay. Well, reduce your risk then. Reduce your risk. And you could say, okay, remember, this is all about short-term rapid growth, right? We're not going to be in this for months, right? We want to try to stay in a trade for the duration of the trend, but in trading, that's really more short-term stuff, right? This is not stock trading. We're in the futures market, and this is for short-term growth. So those are the opportunities we look for to make money short-term. Okay. Opening range is taking place on the S&P. Recalculate. And let's recalculate this chart, clean everything up. There we go. Okay. 15-minute opening range. Come on, opening range. Extended trend, right? Extended trend on that high time frame. This is the candle that's forming the opening range, okay? And the lines will be put on your chart automatically. Let's take a look at yesterday's opening range right here. So yesterday, sideways consolidation, right? And we were looking at this and we were saying, okay, top of the swing, bottom of the swing, and all of this, I mean, look at this, just all of this is just happening in the middle. It chose a direction, broke out to the upside. Okay, broke out to the upside right around, what is that, 7 o'clock? Right there. 7 o'clock at night, boom. Broke out to the upside, pulled back into TrendCloud, and went sideways. And now we're pulling back. Okay, 15-minute chart. So now we're forming the new opening range. We're forming the new opening range in an extended trend, okay, and downward momentum, right? 4-hour chart, momentum is down, cycling down. So we're in this corrective move on the high time frame. Trend is extended here, right? We might have a nice opportunity. We might have a nice shorting opportunity because of this, right? High middle time frame, extended trend, forming a double top. Maybe this comes up here, breaks a little bit above, and then starts to break down, right? Where can we take advantage of that? Well, everything has to line up. On the pullback, we need to see CCI break below negative 100, right? Break below negative 100 right there. We need to see that. Then we can start looking for short positions. Cycling down, momentum is down on the high time frame, but we're pretty much in, we're in an uptrend on the high time frame. So we could take advantage of some short-term growth, right? We can take advantage of the fact that this wants to pull back somewhere into the trend cloud. And that could be all the way down to the 50, right? So we can box that out and we can say from the 50 right to the top of the trend cloud, like that, is where this thing is going to pull back into before it makes another move up, breaking through structure. All right, that's what we're looking at. Let me get through those lines and let's take a look at what that would look like on the lower time frames. Boxed out the high time frame, upward trend cloud. Well, from here to here. That's really not a lot of asymmetrical leverage, is it? Right? Not a lot of leverage there. If this goes up here and becomes even more extended, now we can start looking on the lower time frames, like on the 15 or 5-minute chart, for something like, right, comes up here, and then we see something like this on the lower time frame. Pull back, break of structure, up in here, right? On the lower time frames, if we see this pattern take place and the trend is extended, then we can start taking advantage of the downward momentum, right? And this pattern is going to take place like up here, right, on the 15-minute chart. So it pulls up, it does some kind of little double top, breaks through structure. Great. Now we can start looking for a pullback into supply, like this. Now we can start looking for this, for that move down. And we will join the move down on the extended trend, because when the trend is extended, it wants to break below the 50 and recalculate. So we would look for a pattern like this on the low time frame. A move up, trend is extended, okay? Let's just draw it again. Trend is extended on the 1-hour chart, let's say, right? Trend is extended on the 1-hour chart. On the low time frame, on the low time frame, you get a move up. It's extended on the 1-hour chart, right? And then you get something like this right there. Now we can start looking for supply zones. Pulls in, breakdown, right? Maybe tomorrow this ends up being the opening range, and we get a breakdown and the retest of the opening range for tomorrow, right? Maybe this becomes the opening range for tomorrow. Pulls up, bounces around the opening range, breaks out of the opening range, breaking through structure, retest, move down. Now, on this move down, let's say tomorrow, on this move down out of tomorrow's opening range, the retest of tomorrow's opening range, we have momentum on our side in an extended trend, right? So we have extended trend on the middle time frame. We've got a retest of the opening range. Momentum is down on the high time frame, and momentum is down on the middle time frame. Everything lines up. Everything lines up. And it would look like this. Breakout of the opening range tomorrow. Retest. We can take this trade because trend is extended. Momentum is down. We are cycling down, and momentum is down on the high time frame. Okay? So that's when we can take advantage of it. The only thing we wouldn't have is the trend on the high time frame is still up, right? But remember, that's just one piece of the puzzle. And where would this thing be going to? Well, it would be pulling back into some support area, which would be our target. So that's where you would look at what's here. Here's from here to here. So again, it's not too far away, right? This would be real short-term kind of trade. You'd have to decide Is that something that you want to be a part of, right? So we've got these little levels of structure here, right? This little tail on the high time frame is represented by a drop base rally on the middle time frame. Look at this, right? This on the lowest time frame, what does that look like on the 15-minute chart? Well, it kind of just looks like a drop and a rally, right? Well, it's actually drop. This is a basing candle, and this is a rally, okay? But it doesn't really go anywhere, right? But you can still take these areas as targets for your short, okay? Let's get over here. So that's what's going on with the indexes here. Okay. So now we've got the opening range, extended trend. Momentum is down on the high time frame. We just don't have it yet on the middle time frame. We really need to see some break of structure to the downside, and we need to see a break below negative 100 on that CCI indicator. Micro Dow. Wow. Okay, so Micro Dow super extended on the 4-hour chart. Never recalculated. 15th wave. Wow. 15, 16. We're going into the 17th wave. Here's structure. Right there. We just broke above. That is looking like a double top situation. So we're extended on the high time frame. We're extended on the middle time frame. And we're starting to, looks like it really wants to break out. Look at this 15-minute bearish candle here. Okay, if we break above this candle, it might spike. It might spike out of here. Okay. Look how close we are to crossing that negative 100 line. Real close, right? We're really close. So when is this thing going to turn around? What do we need to see? Same thing, right? What do we need to see on this low time frame here? Here's the current situation right here. Let's draw it like that. Make that red. Low time frame supply zone. If we break above, if we break out of this, that's going to give this thing some strength. But what do we need to see? We need to see a pullback. A lower high, break of structure right here. We need to see this pattern in order to take this short and to take advantage of the extended trend. So yes, the trend is up, but momentum is down on the high time frame and we're extended. Remember, extended trend on your high time frame usually means trend reversal on your lower time frames. Extended trend on the high time frame usually means trend reversal on the middle and lower time frames. Okay? Well, what does that look like? It looks like this. On your low time frame, you've got to see some kind of break of structure, right? Breaks above, pulls back. Maybe on this pullback, that's when we break below negative 100, and then we can pull back into some kind of supply, make the move down. But this is what we are looking for. Something trigger? Oh, crude oil triggered. Let's take a look. So we're taking a little chance here, right? On the opening range. Okay, it broke out to the downside. And momentum is with us. We got to take a look at the 5-minute. 5-minute opening range. So this is the retest, right? So we broke out to the downside. We're retesting the opening range with downward momentum, right? This thing can pull back all the way up into here. We've got this right here, right? Could it go a little bit higher? Just looking at the trend cloud here, right? That's why these are a little more riskier trades, because we've got that green 50. Candles are red, but with a green 50, right? So we reduced our risk. We take a chance, right? We take a small chance here. It could come back up. It's transitioning. It's trying to transition to the downside on that high time frame. And we're getting a little spike up here. Coming up to the top of the cycle, right? We like that. We like the fact that we're coming up to the top of the cycle, because at the top of the cycle usually does like this, right? Top of the cycle and then starting to cycle down. We took the full length of the opening range here. Okay. Looks like it came up so far, hit the top of that supply zone on the 5-minute. Well, let's see. Let's see if we can make a little bit of money on this. We've got the 50 simple on the high time frame, and we've got the trend cloud on the middle time frame here, right? I would rather see this, a little bit higher, but this is what we went for, right? This is what we went. We went for the opening range retest on this. Nothing more, right? Nothing more. You always try to stack as much evidence on top of each other. Like if this pulls back, it might pull back deep into the opening range, but we never know, into the trend cloud, right? All of this from here to here, basically right where our stop loss is, from here all the way to here is the middle time frame trend cloud. Okay, that is an area of resistance for the push down to go lower. Okay, so we've pulled back, and that's it. That's the trade. We're taking the retest of the opening range here. We'll see if we can get involved with that. Natural gas was good trade today, but signal came before my time. Also soybeans. Let's take a look. Let's see here. Natural gas. Why is my... Oh, I'm on the wrong contract here. Natural gas. NG. NGG 2024. I believe that's what we're on. Yep, there we go. Bring that up. Very good. Upward trend, upward trend, upward momentum, upward momentum. Wow, yeah. Nice bear trap, right? 5-minute. Well, basically pulled back into the cloud here. Right here. Right, pulls down. We get the signal. upward momentum. Yeah, we can still take that signal. Here's the 5-minute candle here. Okay. That's the 5-minute candle. And it did get us into the trade. So technically this did get us into the trade here. So the pullback into this area, okay, if this pulls back into here, I mean, we really have a lot of momentum to the upside here. Right? We are in this high time frame supply. We are in supply, but we're in an uptrend with all this upward momentum here. We might be able to get into this. So it is pulling back. Why don't we take the pullback? Maybe we can catch this to the downside here. It's starting to take off. It's starting to take off. Right? Here's our entry on TrendCloud right here. This is our TrendCloud entry. But it would be nice to try and catch this before that happens. Dang it. Where is it? Oh, come on. It's not letting me buy it. What's going on here? It's not letting me buy it. Where's my buy order? Create new order. Buy. Okay. There we go. I'm not sure what happened there. And there we go. Okay. So we did get a trend cloud signal here on the 5-minute chart. It's pulling back into upward momentum, cycling up. Momentum is up. We are high on the curve, but let's see. Let's see if we can catch this move. Okay. So, okay, good. So we did get a pretty good fill on that. We've got our risk. And let's see. How's our short doing here? Still inside of the opening range on crude oil and natural gas. We just got in on natural gas here. Okay. So we're taking that trend cloud signal and we're cycling up. Momentum is up. Trend is up. Momentum is up. So as long as we don't get a deep pullback again, we have a good chance of getting in on this right here. Soybeans. Kazi is saying soybeans. Let's take a look. Soybeans, we don't use the opening range. We broke through some structure here. We're crossing over. Momentum is up, right? We definitely have momentum to the upside here. We've got momentum to the upside. Are we on the F contract for soybeans? What is the contract here? Let's see. I think we're still on the F. S. Z. S. Soybeans. Yeah, pretty sure. Yeah, we have to be. H contract. Oh no, I think we're on, we have more volume on the H contract here. Yeah, we're on the H contract. I was wondering about that. Okay, there we go. H contract. Breaking above that high time frame, right? We're breaking above that high time frame trend. Momentum is up, breaking through structure here on the middle time frame, and we're pulling back into the trend cloud on that 5-minute soybeans. Let's go out to the 15. Okay, so this might pull back, right? Here's some support, right? This might pull back into that support level right here. Here's TrendCloud, right in here is our area that this might pull back into. So if this pulls back into TrendCloud, we might get like a 15 or a 5-minute TrendCloud signal, like right here. Could we have taken this move? Let's see. Vertical axis, TrendCloud signal, 7:40 in the morning. Does it line up? Cycling up, momentum is up. Momentum, yeah, it does. Yeah. So this right here at 7:40 in the morning lined up very nicely, cycling up. Momentum is up, right? See, broke above positive 100, pulled back to the 0 line, and cycled back up in an upward trend. Beautiful move right there, very early in the morning, with momentum on our side, right? The only thing missing, high time frame trend, right? High time frame trend is down. One piece of the puzzle missing is okay. 2 pieces, no good. ZSH. Thanks, Kazi. Yeah. Yep. Let's check. Yep, there we go. How about corn? What's going on with the corn? What's going on with our corn reserves? Okay. All right, so some mixed signals, right? Downtrend, sort of red candles, just starting to cycle down. Momentum broke above positive 100 here. So we've got to gain. We're missing momentum. We're missing momentum. Wheat. Okay, here's wheat. At this point in time, we were looking at this. Here's supply. Here's demand. Everything was in between, and we just broke above. Okay, so we broke above our supply zone. We pulled back into TrendCloud, and now we're impulsing up. Right, so we have a nice move here. 5-minute chart, didn't get a signal. It didn't pull back far enough to give us a 5-minute signal. Maybe it'll do it. So let's get rid of all of this. We might have a move coming up on corn, or I'm sorry, wheat right in here, right? If this pulls back, it's going to pull back into middle time frame trend, high time frame trend right at the trend cloud. So right in here, right in there, right? If that happens today, we've got a really good chance of this thing moving higher. Let's go look at some currencies, and then we'll check back in on our, wow. Okay. 15-minute trend became extended here. 15-minute trend became extended. And what did we do? We pulled back, recalculated, and now we're making that move back up in an uptrend, right? So high time frame, uptrend, right? Momentum is or was up, right? It's just starting to correct now. We're starting to come into a corrective move or a corrective phase on that high time frame. And we're going to pull back somewhere into here, somewhere in here, right? Maybe this becomes extended, and then we pull back into here, right? So it's all mapped out for us. It's all mapped out for us, right? Pulling back. We're looking for this. That's what we're looking for. Okay? That might be represented on this chart here, right? What's it going to look like on this chart? We can draw it out. Here's the first top. Here's the second top being made. Maybe it wicks, right? Does something like that. Here's the close of the candle, right? Let's say this is the body of the candle right here. That's the body of the candle, okay? Pulls down, breaks through structure. Grab your Fibonacci, here to here. Pulls up into that 618. That's where you would go short. Breakdown. Okay, so it'll be represented on the lower time frame here. That will be represented on the lower time frame. So we can start to set alerts for that. So as of right now, the alert would be set for here. When we start breaking through this, that's when we can start looking for shorts on the Swiss. So I think if you double click, can we set an alert like that? Nope, we got to right click onto it, add alert to horizontal line. There you go. Crossing down. And we can say crossing down, trend reversal. Trend reversal, double top. Anything that's going to remind you of what that is. Okay, that's what you would do. Cool. All right. Let's go check on, we're at the top of the hour now, guys. Let's go check on our trades here. How is our crude oil doing? Wow, crude oil went right to the top. It went right to the top, and now it's starting to reject. Okay, little bit riskier of a trade, right? And natural gas is doing well. We took advantage of that 5-minute TrendCloud signal there, and we're still going. Okay, so we got in just in the nick of time. You can thank Kazi for that. Kazi was like, "Hey man, natural gas, 5-minute chart is with momentum." These 5-minute TrendCloud signals do very well when you have momentum on the middle time frame and momentum on the high time frame in the direction of your trade. We're pulling back here, but we just have to let this play out, right? So we've got a really good chance. It worked here, right? 7:45 in the morning. Remember, Krishnan, I'm telling you, man, 7 a.m. to 11 a.m., that's really the sweet spot for these signals. And we have it here, right? Let's line it up right there. TrendCloud signal, 5-minute chart, 7:45 in the morning. And we are just crossing above positive 100. We're cycling up. Momentum is up on the high time frame. And we still have that red candle there. We still have that red candle. But look where you get into the trade, right? We get into the trade right here, right? This is an inside bar. And then boom, right here, we get into the trade right there on this candle, cycling up. Momentum is just crossing. Okay, so you can see all of this stuff starting to happen and starting to move to the upside. And there you go. Okay, so we're pulling back. Hopefully this works out. Crude oil. All right, we're starting to form some wicks here. You see that? We're starting to hit that resistance area. Starting to hit that resistance area. And let's see if the opening range can survive. You know, can we survive the opening range here for that retest? All right. Let's just see here. Looks like we're getting a nice reversal candle here. Getting a nice reversal candle. Second candle on the 4-hour chart. Transition candle turning yellow. We need to start breaking structure here. Okay. 10 a.m. reversal. Nice rejection here. Right? See, this is what happens, okay, when you got momentum on your side. Okay, right now, what is this, 4-hour crude oil? Momentum has shifted back to the upside here. Okay, terrific. Little riskier trade. It's unknown. We don't know what's going to happen, right? But we do have it on the middle time frame. So let's see if this works out. I would really like to see some movement to the downside here. Here's where value is, right? Value is up in here. We could have reduced our risk if we just took the trade right there. But everything is 20/20 in hindsight, right? And natural gas, very nice. Moving to the upside in natural gas. Took that TrendCloud signal right here. 5-minute TrendCloud signal. Momentum is up on both time frames, cycling up. This is the better trade. This is definitely the better trade. So for this short here, I think once we get out, right? Once we get out of here, because momentum is against us now on that higher time frame, I think we want to be out of this. We want to be out of this as soon as possible because we got our winning trade right here on natural gas. Thank you, Kazi. Thank you, Kazi, for pointing that out. Yep, absolutely. Yes, momentum-based indicators definitely work extremely well for the day trading. And we've been seeing that here in the live room. 5-minute TrendCloud signals work very well in the futures market. Gold, crude oil, natural gas works very well when you have momentum on the middle chart and momentum on the high time frame chart in the same direction. So momentum and trend are up. 5-minute signals, take those all day long. Okay. Unfortunately, on our crude oil trade here, momentum is against our short. But we do have trend and we do have the momentum on the middle time frame. So we could survive this, and it could make us a little bit of money here. All right, guys. That's it for me. We went a little bit over. I will let you know how these trades work out, but I will see you guys tomorrow, 9 a.m. Thanks, everyone. Talk soon.